start with a recent piece you wrote for Bloomberg Opinion in which you said, quote, no new regulations will help FTX's customers and creditors. What new regulations would do is block one of the most exciting areas of crypto innovation, which is a new type of financial exchange. No doubt there will be failures and scandals associated with these innovations, but the innovations have the potential to fix problems and eventually eliminate them, while no one can believe that some future round of regulation will be the one to finally solve the ancient problems of finance. So, Aaron, really? No new regulation after this episode?
Well, first of all, FTX was regulated in every essential. So it's not a question of an unregulated crypto. It's not a couple of, libertarian hackers or, offshore in Russia. These were entirely regulated financial institutions who filed all paperwork. They were audited. They were backed by major institutional investors. And the problems we see in FTX appear to be almost identical to the ones we saw in MF Global, and other major failures. So it's really hard to believe that some new round. I mean, the issue is whenever regulations fail, when a regulated entity fails, the answer is always new regulations.
Okay.
But Bitcoin was invented specifically to solve these kinds of problems. And it's still true if you own Bitcoin, if you keep your private key, not on your computer where it's connected to the internet, but somewhere secure in cold storage, you're absolutely immune to these kinds of problems.
Okay, Aaron, I guess I get the argument that regulation doesn't necessarily prevent all bad actors from acting badly. But at the same time, if someone's going to break into my house, I'm still going to lock the door. They still might be able to do it anyway, but I'm still going to lock the door. Isn't there a happy medium between installing some safeguards that will help protect the consumer and still allowing innovation to move forward?
Well, regulation is like putting a do not rob me sign on your house. Crypto is like locking your door. And that's the whole point, that crypto offers ways to let you lock your door. You don't have to rely on the SEC in Washington to bring an enforcement action 5 years later and have some complicated court arguments. You just lock your door. Yeah. And that's the promise of crypto.
That's the key, right? I mean, that's why Kaylee doesn't keep all of her valuable stuff at Sam Bankman-Fried's house. She can lock her own door when it's at her house. Are more investors learning that lesson the hard way now? Do you think, Sonali just told us that there have been more outflows of Bitcoin from centralized exchanges this month than there have been in history?
I hate to be cynical, but in the next crypto summer, the next time crypto assets start going up fast, people are going to do exactly the same thing. They're going to leave their assets in unsecured places. They won't keep their keys, and there'll be losses then, and in traditional financial institutions too. Again, more keep out signs is not the answer. We need locks.
Is this still going to be problematic for the value of crypto assets? I mean, there are true believers, clearly, who are going to keep their own private keys and don't care about regulation or fiat currency or central banks. Nonetheless, if you see the bankruptcy of Genesis or Gemini, that's a real problem for the price of Bitcoin, isn't it?
Yeah, I agree. There's the fundamental use case for crypto, which honestly only convinces maybe 1% of the population, technophiles, libertarians, and so on. We have not convinced the majority of people, or even a significant minority, even 5 or 10% of people, that they really need these crypto protections. They really need these crypto innovations. And instead, you get this wild speculation in things that don't carry with them the crypto protections.
Okay, so how do you as an investor differentiate between those just vehicles of speculation and what actually is a worthy investment? What are you looking to?
I have a very simple strategy, and I've done it since 2011. I keep 2% of my wealth in crypto, and I try to get as broad a exposure as I can. I have no ability to, distinguish who are the good innovators and who aren't. And that means I'm selling when things are high and I'm buying when things are low, and it's been enormously profitable. If crypto goes to zero tomorrow, I'm way, way ahead of the game. And I think this is the rational attitude for most investors, unless you're a true believer, unless you have, carved in stone, God gave you this message that crypto is going to take over. look at it as a reasonable portion of the economy. I believe it will be 2% of the economy in the long future. And to compare that, the internet's about 7% of the global economy. So I want exposure to it, but I don't want to guess what's good and what's bad. Now, I never put money in FTX. I never put money in, unsecured. I keep things in private keys. I use the true crypto underlying functionality.
Okay, so you say you buy when it's low. Would you be encouraging people to buy here when we're 72% off from last year?
Not as a one-shot deal. If you make up your mind, I think crypto is X% of the global economy in the long run, and then get broad-based exposure at that level. But that means you're committing yourself systematically to buying when it's low and selling when it's high, not getting wildly excited because it's gone up, not getting depressed because it's gone down. I think that's the right attitude for everything. It's the attitude I took with the internet back in 1995. I decided it was 5%, and I've kept 5% of my wealth in internet ever since. I believe in diversification. I believe in modern portfolio theory. But this is the right approach.
Does that mean you don't favor Bitcoin, tried and true, the OG, over like Dogecoin, which was a joke? Does that mean you don't care about proof of work versus proof of stake? Does none of that stuff make a difference to you?
Well, okay, that's my first thing is, just the 2%, get diversified as possible. But I do apply some basic tests. I don't do any Dogecoin. I don't do any things that seem to me to be clearly have no fundamentals. I try to look at things where the developers are respected people, are people I trust and I respect, that are backed by institutions, Polychain, Mark Andreessen, Horowitz, things like that, and that have some case where I read it and I say, yeah, that makes sense. That might work. When I see Dogecoin, I say that makes no sense. There's nothing there.